Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Looking at particular strategies that show you this. This is the CDD, which is the Canadian dollar and U.S. dollar pair. Of course, the U.S. dollar is the base currency. And what we're seeing here is we have that same kind of type of action where here's an upside move. We have a more gradual correction here. Stronger upside breakout. It actually gains momentum with a second leg here. Our three highs. And then it congests along that lower channel line, just like we saw in that previous slide. Marked number 4 in this particular measuring pace slide. So it's a variation of that same concept or that same idea, except in the actual CDD example, we had the three highs looking a bit more like this, and then they're hugging it. Actually, let me clear that here. So it looks more like 1, 2, 3, and then it hugs it. Hold on a second here. Before it leads to that breakdown. And in this case, instead of forming that two-way continuation move where it's actually hugging a support level, it puts in a slightly lower low, comes back into the congestion, and then continues. So you actually have this entire congestion of the two waves forming a little bit differently than in my previous template. But it's ironic because I came across this chart after I put that previous template together, because the template itself was created based upon a lot of the price action and how price waves and price movements come together and how I've seen them develop over and over again. So you have similar patterns that kind of flow from one pattern into the next on a very consistent basis. And once you start to learn how pace and how momentum shifts from one pattern into another or one strategy into another, you can actually develop strategy guides where you have bull flags leading into momentum reversal or double top patterns, leading into head and shoulder or avalanche patterns, leading into a bear flag, where you will literally have a series of one pattern right after another, and that series of patterns repeats itself over and over again, where the only difference is how that pace or momentum develops from one pattern to the next. All of the examples that I compiled in this particular presentation were done after I'd created those templates, but you're going to see very common similarities amongst all of them. Again, this is one of my favorite strategies, and in this particular strategy, there's a couple of ways that you can enter it. You can enter it coming off of the third high. What I want you to notice here, though, let me see if I can get a little bit smaller pen here, is that going into this third high, the momentum is still pretty strong. You still have a stronger than average momentum. In fact, within each of these waves into this high, you have strong momentum. It's just that the overall pace of this trend channel has shifted. And a lot of people get caught up in thinking, well, the overall the momentum or the pace of each of these waves is still stronger than average, so hence it's going to be higher risk for a reversal strategy, when in fact the momentum overall is changing. You can even see here, if you kind of look a little bit closer, this is a 1-minute chart, so it's very hard to see. You can't really get too much smaller. But we have the same pattern repeated in this third test of highs, where you have that push into that third high, and then the kind of flag or upside down hockey puck type of appearance at that third high. So this is like a doubly strong setup here. And the first way you can enter that is when that channel breaks into that third high, it triggers a short as that channel breaks. So your stop is actually very close to where your entry is on this particular setup. And a secondary setup on this is the avalanche formation that is formed when it hugs that support level marked here as C, and that support level breaks lower. In that case, your stop would be above that particular zone marked C, and if you had entered it coming off of that third high of B, you could actually move your stop now to above C. Many times I'll actually add to my position if I see this particular pattern develop where I have an avalanche following that momentum reversal pattern or momentum reversal strategy. Another example of this is that we have a number of variations of changing pace and changing momentum on this EUI daily chart. And the EUI, of course, is the US dollar-euro pair as the options contract. And again, for those of you that would like to check out charts of these, you can check them out at ise.com/quotes. And you can also check out a number of previous webinars at that site, ise.com/archives. So for those of you that are just coming in, I would like to encourage you to do so. Now looking at this, we have a number of things taking place here as far as momentum goes. You have an initial shift in momentum up here where we have slower overall upside followed by a stronger downside move. We have another congested move here leading to stronger breakdown. Another congested move here. Flush move on the downside. And notice that at the end of that one, we have the momentum shifting. So at the end of this A drop, we have a momentum shift marked here as B, which is basically the opposite pattern as we saw here, where we had the upside move marked A, and the momentum shift marked B. There's a little bit of difference in this particular one, though, because although we have it hugging moving average resistance here, this could be considered that move marked C from our previous slide. It could also be part of a larger pattern where we have this overall drop, and now this move or correction becomes B. So if I clear this, you can see the larger drop here and then the overall shift in momentum here. So now we have this larger drop A, and this would be considered the B part of that move or the end of that hockey stick. And that's really a good way of thinking about it because you have that little bit of an angle to it followed by that longer handle. And that helps create these stronger momentum reversal patterns. We have very similar type of action once again up here where we have that large, strong upside move and then the shift in momentum. The difference is in that this case, B is actually more of an avalanche because it doesn't create that higher high. It actually has pulled lower, congests, then breaks, has another little congestion where it's more towards the lower end of that range, and then breaks lower again.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.